Hello, I'm Saxon East, Assistant Editor of Insurance Times. Today I'm interviewing Otto Thoresen, Director General of the ABI. Hello, Otto. Hi. About the Eurozone and the effects on the insurance industry. So starting off, as head of the ABI, which has a vested interest in seeing stability in the Eurozone bond market, what steps do you like the politicians to take to resolve the situation?
Well, I think stability is the key point. I think everyone involved around the financial sector is looking for a more stable outlook. And I think the key to unlocking that is really decision making. We need more certainty about the future and more speed around decision making. And really the objective behind that, well, it would be to narrow spreads on government bonds. It would be to show a clear way forward for those countries who we know are basically solvent. You know, how are their economies going to develop within this environment? And for those countries which are more challenged, the countries where clearly significant steps have to be taken, let's see the plans and let's see the plans executed well.
How seriously do you think your insurer partners are now taking the situation in the Eurozone and its potential consequences?
Well, I think UK insurers have been looking at this position seriously for some time. The events in the UK over past years, I think, alerted UK businesses to the potential impact of movements in credit markets like this. So they've been managing their asset bases over time to get to a point where their exposures look sensible from a risk point of view. Clearly, there's a lot more activity in the European markets now, and that's being acted on by European insurers. So I think the UK businesses have been probably a little bit ahead of the game here.
Have you been lobbying European authorities on anything to do with the Eurozone?
I think not particularly around the Eurozone issue. I mean, there's so much regulation changing in Europe at the moment that of course we're engaged with the European authorities on many of those issues. I think the questions that now people are asking are what future might we be looking at? You know, in 5 years' time, what might Europe look like? Now, obviously, I've got no more of those answers yet than anybody else has, but I think the questions are being asked. I think you should also realise that actually within the regulatory environment that we're operating, there are many pieces within that environment which can be, you know, adapted and calibrated to deal with many different circumstances. And I think from that point of view, the interesting thing will be to see how the European picture evolves and how we have to adapt.
Do you think the Allianz bond insurance idea for the EFSF can work despite its teething problems?
Well, I think it's undoubtedly the case that as the picture becomes clearer and as it becomes more apparent how Europe's going to evolve, given the real financial challenges that there are out there at the moment, we're going to have to look at a broad range of solutions. I think that proposal certainly raised some interesting points. From my point of view, I think the issue is, you know, does the European Financial Stability Fund look strong enough in an environment like this to provide those sorts of guarantees? I think we have to be very careful as we look at the options that are open to us to think about what's going to give people most confidence. I think there's a lot more work to be done on these ideas over the months and years to come.
Do you believe insurers with exposures to peripheral countries' sovereign debt should take on more capital to cover those bonds, something which is being suggested by EIOPA?
Well, I think the ideas that are coming out of EIOPA are beginning to reflect the fact that the outlook for sovereign debt is less certain than perhaps it was when the initial criteria were put in place, really just reading across from the Basel rules. Exactly how that will pan out, though, I think is far from clear. And certainly our interpretation is that what we're seeing at the moment are just some of the early thoughts about how the system might have to adapt and be rethought. So I think it's very early to be jumping to conclusions about what the implications of that might be.
And what effect do you see the Eurozone situation having on Solvency II in particular?
I think it's important to remember that Solvency II has been under development for many years and is getting very close now to the point where it can be implemented. I think from that technical point of view, momentum will continue on Solvency II, and I believe that we'll see implementation more or less on the schedule that we have seen publicised over the last few months. I think clearly what we might be having to deal with in 5 years from now or in 10 years from now is a different world. And the challenge there will be to make sure that Solvency II can continue to apply effectively. But it's more that way round, I think, that we should look at this than assuming that there'll be any slowing in the pace of execution and delivery of the project.
Thank you very much for answering those questions, Otto. It's very interesting.
Thank you.
I look forward to speaking to you again soon.